Imagine holding a Roman coin in your hand. In the year 150 AD, that denarius was pure silver, 100% valuable metal. But just 150 years later, that same coin contained a mere 3% silver. The rest, worthless filler. This isn't ancient history. It's a warning from history that's playing out right now in your wallet. Welcome back, 10Xers, where we uncover opportunities that will appreciate at least tenfold within 10 years. My name is Peter, and this week we're diving into something that forms the absolute foundation of my financial philosophy and the true backbone of the 10X portfolio strategy. Let's dive in. Have you ever wondered why your savings seem to buy less every year? Let me show you why, and more importantly, how you can profit from it. What happened to the Romans is called currency debasement, and it's happening all around us today. In 1971, President Nixon made a decision that would forever change the global financial system. He unplugged the US dollar from gold, allowing the currency to be freely printed without the constraints of physical backing. That wasn't in some distant past. That was just 54 years ago. And since then, the US dollar has lost over 80 to 90% of its value. Think about this. In 1971, gasoline was 40 cents a gallon. A new car was around $3,600. And again, in 1971, the average rent for an apartment was $150 per month. Now, during this same period, you would have been dramatically better off holding real estate, precious metals, collectibles, stocks, or as we saw during the pandemic, even toilet paper. Here's my central point. Your savings and investments need to be in assets, not currency. The foundation of our 10X portfolio strategy is built on this historical truth. Currencies debase, and some eventually fail. It's not speculation. It's a pattern that's repeated throughout history. Over time, 775 fiat currencies have collapsed completely, including the Roman denarius, which we started with. And even America's first currency, the Continental, which was designed by Benjamin Franklin in 1776, that currency, the Continental, became worthless in 1781. Now, prior to the Continental, each of the 13 states had their own currency. Now, if you believe governments are suddenly going to stop printing and devaluing money, well, you'll have to convince me. Until then, the printing presses continue to run and the smart money moves into assets. This reality leads us directly to what many call the modern day gold, Bitcoin. I've been a Bitcoin advocate since 2013, well before it became mainstream. I won't turn this into a Bitcoin masterclass, but the fundamental premise is elegantly simple. There will be more currency printed worldwide than there will ever be Bitcoins created. Bitcoin is mathematically fixed at 21 million units. No more, no less. This scarcity makes it essentially digital real estate in a world of unlimited currency printing. In the face of ongoing global currency devaluation, I firmly and wholeheartedly believe a strong case exists for Bitcoin to increase 10x within the next decade. But wait, I'm not recommending you buy Bitcoin today. I've got something potentially much more interesting. Today, we're getting creative. Instead of adding Bitcoin directly to our 10x model portfolio, I've identified something potentially more exciting. A stock that appears to be deeply, almost absurdly discounted. Today, we're adding HIVE Digital Technologies, a Bitcoin mining company trading under the ticker symbol HIVE, to our 10x model portfolio. Let me break down why this opportunity caught my attention. HIVE currently has a market capitalization of $220 million. They generate approximately $100 million in annual revenues, and they mine approximately 3.5 new Bitcoins every single day. Even more impressive, within the next 9 months, the company is positioned to quadruple their mining capacity. Now, here's where it gets fascinating. As I mentioned, their market cap sits at $220 million, yet they hold $180 million in Bitcoin on their balance sheet, plus another $40 million in cash, with only $25 million in debt. That means they have $195 million in liquid assets. Again, Bitcoin and cash combined. So here's the bottom line that makes this opportunity so compelling. HIVE is currently trading at around $1.50 per share. Their $195 million in Bitcoin and cash works out to $1.33 per share. That means for just 17 cents per share, pennies, you're getting HIVE's entire operational infrastructure and mining business. Let me emphasize, for less than $1.50 per share, I get $1.33 in liquid assets, plus a business that produces 3.5 Bitcoins daily and is about to quadruple its capacity. I'm no Warren Buffett, but HIVE looks like the definition of a value play. Over the next 9 months, dollar cost averaging into HIVE makes tremendous sense as they expand their mining operations. Remember, this isn't financial advice. Always do your research before investing. And again, make dollar cost averaging a habit. It's a cheat code to successful investing. When you dollar cost average, things like tariffs and trade wars become opportunities to seize upon. It's the complete mindset flip. So I had promised we'd explore some fascinating situations in this series, and I believe HIVE fits perfectly into the 10x model portfolio. Remember, our core principles are: do your homework, understand the business you own, and practice patience. The market rewards patience. For timely updates to this channel, right, make sure you subscribe. And again, my name is Peter with Money Philosophy. Until next time. keep building your 10x portfolio.